welcome to the weekly outlook. We're just looking through the calendar for next week, and there's a few sort of data announcements coming out, but there's only a couple that we're really interested in discovering the outcome. Now, first of all, we've got Governor Carney speaking on Saturday at 3:25 a.m. So quite early morning. We're looking to see what he has to say with regards to future guidance, if he comes out with anything to do with monetary policy at all. He's actually talking about global inflation dynamics at the economic synopsis in Jackson Hole. So I'm sure there'll be some sort of mention of monetary policy there. So we're going to be keeping an eye just on what he says there. Now, don't forget the markets are quite mixed at the moment because we've had that bit of crash from the Chinese economy, and their stocks had that huge drop off. A lot of those losses have been paired since then, and things have started to return back to normal. Now, one of the currencies you can see that quite clearly in is the euro, which I've got on the screen there now. You can see how that started to return. We actually did have a sell on this in the live room at 113 today. Took profit at 112 there. It has continued to drop. It's just dropping down to this area here of recent support and resistance, and it's going to be interesting to see where this is going to head now. Now, the thing that I'm interested in most next week is going to be the ECB press conference. Now, this is coming out on Thursday. And what I'm looking for is to see if there's any mention of extending the QE program or adding further stimulus, which is going to put pressure on the euro even further. Now, the reason I feel that this might be the case is because PMI figures, GDP figures, and CPI figures have not really been improving in the eurozone after that first bout of when that QE first started back in March. There was some positive signs, but even Mario Draghi said himself that it could just, it's likely to fade away later on, and it has started to do just that. Now, the other thing that we're interested in, obviously, is the non-farm payrolls on Friday. Now, again, because of this situation that's happened in China, we're expecting the rate hike to be pushed back slightly on the US dollar, but that non-farm payroll could change things if it comes in much better than expected. So we're going to be keeping an eye on that and the unemployment rate to see what happens there. But really what we're looking for is to trade out of all this data that's coming out next week. Because of the uncertainty in the market at the moment, it's going to be fairly tricky to be able to get a handle on overall direction. But if we look at the euro and take this down a notch to the 4-hour chart, you can see that we're making a nice sort of stepping pattern to the downside here. Okay, so we've had this push down, step back, push down, step back, push down, step back, and so forth to the most recent one that we just had today. So we'll be looking for that sort of similarities happening again next week, and you can see here where the euro is currently just rejected this S1 level today, Friday afternoon, and it's just rejected that from that previous resistance level. So I'm actually quite interested in this to see if this has another pullback now to possibly where it found this area of support here around about the 11230. That's about 50 pips away, so at the moment I think we could be looking to wait for that to pull back to this sort of price and then start to make another low, and then heading in towards the end of the week, hopefully that will give us an option to be in that trade for a nice sort of more of a longer term situation, and see that traded down to these much lower levels where it has been before, around about the 108.50. Okay, so that's what I'm going to be looking for in the euro next week. Now, the other one that I've got interested in is the Aussie dollar at the moment. Now, the Aussie has had a bit of a relief rally. Now, the thing that I'm looking for with the Australian dollar is the RBA rate statement next week, which is due out on Thursday. It is due out on Tuesday. Okay, Tuesday, 1st of September, we've got the RBA cash rate, RBA rate statement. Now, it's expected to remain the same. Now, there have been some green shoots in Australia, but obviously with this thing in China, Australia is China's biggest export partner. But what happened also next week, just to throw a spanner in the works, was we had a huge rally on oil, and that continued through on Friday afternoon as well, where it rallied all the way back up to $45 to the barrel. Now, with oil improving, obviously, it gives a good boost to the commodity market as a whole, and Australian being quite reliant on commodities, especially metals with exports to China, that can give a almighty boost to the Australian dollar. Now, we managed to get hold of a report from Citibank last week suggesting consolidation on the Aussie dollar between 7164 and 7440. Now, this also coincided with my band of consolidation which I'd marked out from previous months. So you can see there we're just below that band at the moment, but I do expect this to pull back up into this band of consolidation and then face some further downside risks. So at the moment, with the commodity prices pulling back, that could be our catalyst for this to slip back into this consolidation band, and then we can look to sell it off from those higher levels around about 7450. Okay, and now if the RBA keep their rates on hold on Tuesday, that could be the catalyst for that to happen as well. So that's where we're going to be looking at for those telltale signs. There is some data due out in China, but again, we're going to be looking at that with a pinch of salt and seeing how the data affects the markets. We'll also be looking at anything that China throw into the stock market, if they try and boost the economy by adding further stimulus to these markets, and see what happens. Okay, the GDT price index on the New Zealand dollar on Tuesday as well will be of interest. The New Zealand dollar has been falling, although we did see a bit of an improvement in the dairy index on the last reading. The New Zealand dollar has still been pretty weak against the Aussie at the moment. We're still looking for this to fall to 60 cents to the dollar, but it's not going to happen overnight. It's looking like it's going to take some time. But a poor GDT auction could speed things up on there as well, so we'll be keeping an eye on that. But heading into the non-farm payroll, try and close what you trade, try and tighten things or lock things in if you can, because we're going to have a very volatile non-farm payroll this month, and I certainly don't want to be involved in any trades just before that. I would like to trade out of that. Okay, so trade early in the week on Tuesday, Aussie dollar, US dollar, Euro, US dollar, and then try and taper things down ready for Friday. Okay, thanks for watching, and I hope you make some pips.